Coming up on the program today, U.S. Vice President Kamala Harris arrives in Tanzania for the next leg of her Africa tour. In South Africa's inflation rises unexpectedly to 7% in February. And Uganda and Kenya signed a new trade agreement. Hello and welcome. This is Business Incorporated. I'm Will Ibong, and as always, we begin with markets in Africa, starting with exciting business activities. Nigeria's NGX, equities traded with positive sentiments at intraday. Nigeria's NGX sustained yesterday's bullish performance, closing, trading at 0.29% at intraday to close at 53,757 points. South Africa's JSE is up 0.85%, still in green territory. Now we look at Egypt. We see Egypt also up at intraday, 0.83%, while Kenya closed Wednesday's session also in green territory, up 0.82%. Now move on to the Middle East, where we see mostly positive sentiments there as well. The Abu Dhabi index was up, trading in positive territory, 0.21%. Dubai was trading more than 0.5% at intraday. Now we look on the other side, still within the region, we see that Saudi's index up 0.58% at 10,564 points, while the Qatari index was the only outlier in that region. It was down 0.01%, although marginal. Now we move over to the EU, where Germany's public debt has reached a record high, as the government deals with the fallout of several cases. It marks a turning point for a country that has long prided itself on its fiscal discipline. Now we're going to go over to Berlin to talk to Kate Ferguson now, who has the details. Kate, how much does Germany owe right now?
Germany owes $2.6 trillion. And to put that in a more relatable context, that amounts to about $30,000 per person. Now, for some countries, this wouldn't be such a big deal, but it is an extraordinary situation for Germany, and it really reflects the extraordinary times we're in. The last few years have just presented one crisis after another, and these have all required major government spending. The first big assault on the economy was, of course, the pandemic, and the German government spent billions propping up businesses, including subsidizing the wages of people who'd had their hours cut. Then came Russia's war in Ukraine and the resulting energy crisis, which has cost the government even more than COVID did. There's also more spending to come. The war in Ukraine highlighted the dire state of Germany's armed forces, and that has prompted the government to announce a $110 billion fund to modernize it. That spending hasn't happened yet, so it will only add to the existing tower of debt.
Now, is there a cause for concern?
Well, economists will point out that other Eurozone members have higher debt than Germany and that the country can afford it. But it certainly is a psychological turning point. Germany's finance minister, Christian Lindner, is from the pro-business FDP party. It's a junior partner in the three-way coalition government. And just last year, he announced his intention to bring back what is known in German as a Schuldenbremse, literally a brake on debt. But world events have not allowed that to happen. We are, of course, also in a very high interest rate environment, and that has a negative effect on the price of bonds. While there may not be immediate concerns about Germany's ability to meet its debt obligations, this out-of-the-ordinary spending certainly does give it less wiggle room to spend in other areas. And it may also lessen its ability to come to the rescue of more indebted nations, as it has in the past.
Does this change how investors view Germany right now?
Well, what this is likely to do is to highlight other existing cracks in the German economy. So for years, the country has been criticized for being behind in tech and for not investing enough in digital infrastructure. With the coffers now under pressure, this kind of issue is likely to fall lower in the list of priorities, and that could have long-term consequences when it comes to attracting investment. Germany is also facing demographic challenges. It has an aging population and a shortage of labour in some key areas. it is trying to address that. Just this week, the government introduced an immigration bill intended to make it easier for highly qualified workers to come to the country. That would go some way towards making Germany a more attractive destination for investors and also improve its prospects for innovation in some of those key areas of growth like artificial intelligence and clean energy.
Thank you, Kate. Now we'll move over to the UK, where there's a bit of good news from there. UK car production rose, unexpectedly. We have Juliana there to give us the good news. Good afternoon, Juliana. We're seeing that car production rose 13.1% in February. Is this a sign that shortages in supply chain are beginning to ease?
Good afternoon, Will. I think that's pretty much a fair statement. I suppose many people will remember during 2021, 2022, when the world was starting to learn to live with COVID and started opening up again, there was a huge scramble for semiconductor chips because, of course, in the Asian region where they were mostly coming from, they were still very much in lockdown. This had massive implications for the UK car industry. So many production plants had to shut down just because they couldn't make the cars. But they are slowly starting to recover. And I think the data that was released this morning by the Society of Motor Manufacturers and Traders does point to that way. The fact that there has been a boost in new car production. In fact, in the month of February, just short of 70,000 cars were made. And it's not just because of the semiconductor chip shortage that appears to have gone away. We seem to have had a boost in exports. So of the 70,000 cars that were produced last month, over 81% of those vehicles were destined for the export market. Of course, the vast bulk of that is in Europe, which is our biggest export market anyway, even though we're not in the European Union anymore. So 60% of the cars went there. But also we are finding new business in places like Turkey and Japan and Germany, I believe. I know Germany and Japan do make their own excellent cars, but we're actually exporting there. And that's because we have seen in the past few months and years a decline from places where we typically export our cars to, which is in China and America. One decent piece of information for the British government is that of the 70,000 cars that were produced last month, over 61% of those vehicles are for hybrid and electric vehicle use. And that's really important because you'll remember that Rishi Sunak's predecessor, Boris Johnson, did say that by 2030 it is going to be illegal or it will be banned to sell any new petrol and diesel cars. Now, people in the industry have been very, very worried about this. Are people going to be worried? Are people going to be able to afford these cars? But looking at the sort of numbers that are coming out of the SM this morning, it does appear as if Britain is bracing itself and getting ready to be electric.
So we'll keep watch and, stay tuned for 2035, Juliana. But more good news there. Primark workers are getting a pay rise to help with cost of living crisis.
Yeah, this is great news, especially if you're one of those 26,000 workers that work for Primark in the United Kingdom. They have announced that they are going to receive a pay rise, and this is the second pay rise that they've been getting in 2 years. So certainly all the benefits that the company have been getting is beginning to trickle down. I believe most people that work in Primark are on minimum wage, but the living standard wage, if you're living in London, I believe is about between £10 and £11 an hour. I think that's about 5,000 to 6,000 naira an hour. It depends. I'm not sure where you can try and even check the currency rate at the moment. But yeah, so it's going to be going up. So I believe everybody in Primark, whether you're 16 or 60 years old, you will be receiving a living minimal wage. So you can actually pay your rent, buy food, and go out with your friends. Many people are working night and day in this country, Will, and they cannot afford to do that, which is why Primark are doing this. And it just follows a couple of weeks ago an announcement by the firm that they're actually going to be investing over £125 million into their high street presence in the UK, which is also good. I believe they're opening up about 60 new stores, including expanding this huge store that they have in the east of London, and that's going to attract about 250 workers. So it's all good, good news. And of course, 2 pay rises in 2 years. One could only dream of such a feat. Well,
so it's more jobs, more expansion for Primark, and we're looking for more workers, and I'm sure they'll be coming from the EU or somewhere if Brexit doesn't get in the way. Juliana, are the markets doing all right at intraday?
Well, it's definitely in positive territory. I was speaking this morning with INI about this new initiative that was announced by the Energy Security Secretary, Grant Shapps. It's 1,000 pages long, but they've announced all different sorts of measures that they are going to be using, this government, to make sure that it boosts the green economy and it keeps in line with all of the announcements that they have made at previous COPs. That's boosted the UK blue chip index at intraday. So it's up, the all share, it's up 0.86%. The FTSE 100, that's up too by 0.16%. And the FTSE 250, the domestic market, it's up by triple digit figures at 1.23%. In the currencies market, the British pound is currently trading up on the US dollar by 0.26%, up to on the euro by 0.08%. And if I can get it out of my mouth correctly, the British pound is trading up against the Japanese yen by 0.43% at intraday. Well,
thanks, Juliana. You did get it out of your mouth. That was a big one. It was good talking to you, Juliana, and thanks for the update.
I tried.
Now, moving over to other markets, Asia Pacific markets were trading mixed on Thursday, with Australia's benchmark index hitting a 2-week high as concerns on the recent banking turmoil in the US and Europe are beginning to ease. In Australia, the S&P ASX 200 was the outlier. It closed 1.02% higher at 7,122 points, led by miners and bank stocks. Japan's Nikkei 225 fell 0.36% to close at 27,782 points, while the Topix saw a larger loss of 0.61% to end. Korea's Kospi was up 0.38% to finish at 2,453 points. The Hang Seng Index, however, was up 0.58%. So we also saw the Hang Seng Tech Index climbing 0.16%. Now in mainland China, the Shanghai Composite was up 0.65% to end at 3,261 points. And we saw the Shenzhen Component also closing 0.62% higher to finish the day. Now in the U.S., stock futures were all higher on Thursday morning. Futures tied to the Dow Jones Industrial Average climbed 100 points. S&P 500 futures and Nasdaq 100 futures were also up 1.42% and 1.79% each. The moves come amid a hectic week for stocks. Now let's check out how these stocks closed out yesterday with Maria Bird.
The U.S. stock market rallied on Wednesday as the Dow Jones was up by 1%, the S&P 500 up by 1.1%, and the heavy tech Nasdaq up by 1.8%. Artificial intelligence industry seems to skyrocket on Wednesday. This is all great signs for the Nasdaq and the heavy tech industries. It is also clear that many investors are looking forward to the end of the quarter on Friday, and they are expecting to see an upward swing, much different than they did a year ago after the first quarter of the year. It is also clear that the glooming of the economy might be coming to an end, and also the bank crises might not have the kind of impact that we thought for the first quarter ending. But many investors are hopeful and continue to watching until the end of the week.
Thanks, Maria. Up next, updates from the commodities market space. That's after the break. To stay with us, this is Business Incorporated. Welcome back. We're going to be talking sweet potatoes this afternoon, and it's a major staple food widely consumed in Nigeria. It is used to produce various consumables like potato flour, chips, and soups. Meanwhile, the price of a bag of sweet potatoes in Nigeria has increased by 37.5% to 22,000 naira in March 2023 from 16,000 naira recorded in December 2022. What is responsible for this hike in price? Adeye Adegbusi, analyst, financial derivatives company, joins me to discuss this. Good afternoon, Adegbusi. Adeye, it's good to have you on the program.
Thanks for having me.
Adeye, why is the increase in the price of sweet potatoes more than the average level of food inflation in Nigeria, which is currently at 24.35%?
So there are a number of factors for this increase in price. Firstly, you can link it to seasonal effects, as prices of sweet potatoes are usually at its highest during March to June. So that's when farmers start planting their seeds, while they tend to drop between September to November as farmers begin harvesting their crop. Also, you can also link it to, like, now, sweet potatoes are mainly grown in northern states like Jos and Sokoto, where there are high levels of insecurity. So this insecurity has, of course, limited supply. You can also link it to high transportation and production costs. But another reason for the increase in price this year has been due to the cash crunch. As most of these farmers, they don't accept bank transfers. So the traders, they have only been able to purchase little supply with the limited amount of cash that they've had. But however, as the cash crunch subsides, we expect prices to fall in the near term.
So Nigeria, if I remember correctly, is one of the largest producers of sweet potato globally, and it has an estimated annual production of 4.15 million tons. Have we been able to satisfy domestic consumption, domestic demand, and why are corporate
just in Africa and globally as a whole? In Nigeria, sweet potatoes are the fourth most important root crops, following cassava, cocoyam, and yams. But however, 85% of production is done by small-scale farmers who operate on small plots of land and use crude tools for production. Consequently, Nigeria's yield per hectare is lower than other exporting countries. For example, Rwanda and Kenya, they have an average yield per hectare of 30 tons per hectare, while Nigeria is only 8 tons per hectare. This can be attributed to, again, a number of factors, like poor quality of seeds, poor storage facilities. Because as you see, traders complaining that they've lost some of their products due to pest infection, which means there are now more losses, creating a big deficit between supply and demand. And then, due to Nigeria's rising population, there's an increase in demand for staples like sweet potatoes, yams, and other carbohydrate-rich food. Another carbohydrate-rich food. So there's now a need to invest in this production, because higher production would lead to an increase in income for farmers and could have a spillover effect to GDP growth.
Despite the high demand we're seeing here for sweet potatoes and their substitutes such as yams, there are some health concerns here, obviously, because of their high carbohydrate levels. Do you think that this health awareness or this seemingly consciousness by citizens or by Nigerians about their health is impeding the investment in sweet potatoes production?
Apart from the weight gain effect that you said, there are also other negative consequences of consuming carbohydrate-rich products like yams and potatoes. You can look at the fact that they have a high glycemic index, which increases blood sugar and insulin, which is not beneficial, which is not advisable for people with diabetes, and they also cause bloating and produce high gas in the stomachs. Of course, this will weigh on demand to reduce demand, but however, there are also positive, there are also benefits from consuming these foods. But for example, they are highly rich in minerals, nutrients, and fibers, and also they help in bodybuilding, these potatoes and all of that. So of course, despite the reduced demand from the negative effects, there's also these positives will support demand in the long run, and there might not necessarily be a reduced demand for it, but reduce demand for sweet potatoes. It might, because of the positive effect, it might remain elevated. Yes, it might remain elevated.
Thanks, Adeye Adegbusi, Analyst Financial Derivatives Limited, for sharing your thoughts on the program.
Thank you.
Now to other stories. U.S. Vice President Kamala Harris has arrived in the Tanzanian commercial capital, Dar es Salaam, where she was greeted by Vice President Philip Mpango, the second stop in a week-long tour of Africa. She's expected to meet with Tanzanian President Samia Hassan today, March the 30th. Madam Harris is the latest U.S. government figure to visit African countries after Treasury Secretary Janet Yellen and Secretary of State Antony Blinken, as Washington strives to counterbalance growing Chinese and Russian influence on the continent. On Friday, she'll fly to Zambia, where she'll meet President Hakainde Hichilema, then leave on Saturday. Now, South Africans will have to dig deeper into their pockets as consumer inflation has gone up by 0.1%, according to Start South Africa. Inflation inched higher for the first time in 4 months, from 6.9% in January to 7% in February. Power cuts, often referred to as load shedding, have continued to add to the cost of food production. Economists say the latest inflation reading comes as a surprise following previous decreases in the rate. Consumer inflation had dropped from 7.4% to 7.2% in December 2022. It dropped again in January, down to 6.9%, making it the lowest reading since last May. Consumers are expected to feel the pinch of the skyrocketing food prices amid other high costs of living. Now, Uganda and Kenya have signed a new agreement to strengthen bilateral relations in trade and investment. The two countries have agreed to facilitate a regional co-investment initiative between the DEFCI Group, the Uganda Development Corporation, and the Kenya Development Corporation. The framework agreements that will be finalized by April the 5th that will allow the transfer of iron ore from Uganda to DEFCI. The agreement includes an all-round supply of raw materials for steel manufacturing between the two countries in order to facilitate competitive production of industries. Also, it provides for an accelerated production of animal feeds to support the dairy sector as an enabler to food security, taking into account the farmers' benefits in both countries. Now, Algeria and France have postponed gas negotiations to May following a meeting on Wednesday between the Algerian Ministry of Energy and the French energy group Engie. The meeting also addressed the current state of the international natural gas market and commercial opportunities and prospects for investment in exporting electricity and renewable energies, especially the development of hydrogen. Negotiations to revive the talks on the gas supply deal faltered after President Emmanuel Macron said in 2021 that Algeria did not exist as a nation before the French invasion in 1830. Political relations between the two countries have deteriorated, and Algeria had suspended the deal after France reduced its visa quota. And that's it on Business Incorporated. Thanks for watching. I'm Willie Bang. See you tomorrow.